Good morning to everyone. How's everyone doing today? Did everyone have a good weekend? So let's get started. As usual, this webinar is for education purposes only, and we do the market analysis here. And please make sure you subscribe to the Telegram channel if you haven't yet, so you get all the updates and notifications. And also, guys, please subscribe on the YouTube. You can find us with Admirals Global, so you get all the notifications when we go live. And please, if you like this video, like and subscribe, give us a thumbs up. I will appreciate it. Also, please remember that at the end of every webinar, the people who join us through Zoom, they will receive a poll there. They can comment, they can say whatever they would like to see in terms of content or any observations. Everything is really welcome. Let's go to the charts. Let's go here first. So before we go to the charts, it's good to just go through the calendar to see some major news events. Currently, the time I use here, so you can see the time, it's based on GMT. Nothing major for today, really. The news are just on behalf of Europe. It's IFO business climate, so it's nothing can create itself volatility in the market. Okay, let's go to our premium analytic portal to check the morning briefing headlines. Hello all, now I see you guys join from YouTube Live. Good morning. Also good morning to the people who joined through Zoom. So what's the headlines for today? Guys, I encourage you to start using the premium analytic portal because it's everything is so simple to be used. So Yellen economy is slowing, but it's not a recession. Okay, that's good to hear. Economy is slowing, but it's not a recession. Okay, what can it be? Progression, maybe. Then we have Congress looks to move forward on chip shortage, drug cost bills before August break. US risk deeper downturn if Fed has to fight inflation alone. Later on this week, we're going to have the Fed deciding about increase of interest rates from 1.75% all the way to 2.5%. It's 75 basis points increases. It's massive, considering the fact that last month they increased it from 1.25 to 1.75. Again, it's big moves. We're going to see this more detail on Wednesday. Anyhow, we have the webinar. China bets big on basic chips in self-sufficiency push. Then gold prices hit by renewed bets on higher yields and a stronger dollar. That was a bit expected. There are signs inflation may have peaked, but can it come down fast enough? That's a good question. What CEOs are saying? We see inflation deeply entrenched. The central bank that holds the fate of nation in its hands. Okay. Putin's unexpected challenge. snaps from his Central Asian alliance. I think it's talking about Kazakhstan. Yeah, here it is. Russian's natural gas game comes with economic risks. Okay. New Volkswagen chief has history baking synthetic fuels. Oh, that can impact the second quarter earnings of Volkswagen. Okay, we will see on the charts. Okay, guys, do you have any questions so far about any news events or any questions about currency pairs? Please type them on the chat box. Now, the charts. What do the charts tell us? We draw this. Now we are on the pound US dollar. And we have this downtrend intact. Let's zoom in a little bit. So on Friday, we talked about that we are in a retracement phase. And what we had in front of us was that pin bar, if you recall, which we say can push prices a little bit to the upside. However, we have to acknowledge the fact that we are in a downtrend. This is the 50 exponential moving average for those who may wonder. Okay, the reason sometimes I plot the 50 EMA on the chart simply because on the daily chart and weekly chart is more relevant to spot the long-term trend. And it's easier for people here if you just started with the trading. The 50 moving average will help you to spot the trends with less effort. And we talked on the 4-hour chart that currently we are within this range. We want the price. You see, guys, we put it these highs here with a rectangle to take the whole length of this high. And we said that we want the prices to break above this area of resistance. And then we want to see a retracement and then to start buying this pair. And you can see on Friday, this bullish candle got rejected just slightly at the top. And since then, it's been 1, 2, 3. It's the fourth 4-hour candlestick, and it hasn't break the high yet. So all the time, remember, higher time frame gives direction, like the daily and the weekly. They give us the direction. Clearly, the direction is down. And then we go to the 4-hour chart or the 1-hour chart to find entries. But we don't go to the 4-hour chart or the 1-hour chart to do our analysis and then to execute on the same time frame. That's going to cost you in trading. And I challenge you to use the daily and the weekly chart to do your market analysis and only go to the lower time frames for execution. Again, if your execution time frame it's the 15 minutes or the 5-minute chart, then yes, your 4-hour it's very relevant to do your market analysis. But in my experience, all these years in trading as an active trader, the daily and weekly charts are much more relevant to do the market analysis. So saying that, of course, we expected to see a move to the upside at some point, but price can chop around without giving a clear trend for us to participate. And that's simply because the major trend is to the downside. As you can see here, when you see on the 4-hour chart, for example, when you see the price moves to the downside, which it's in align with the daily chart and the weekly chart, it has a smooth and predictable behavior. When it moves to the upside to give the retracements, yes, we do expect the prices to come and retest these lows here. So if we are talking about this swing, then the retracement, it's this one here. But do you guys see how the price started retraced and it's trying to push low as well and make lower lows, takes out all the stop orders? If you had a buy order here and then you put your stop there, expect it to make a 1-to-1 to 2-1 to this direction. At this point here, do you see that the market is just flush you out, take you out of the trade and then continue? And that's because it's very unpredictable, the behavior, until the price is going to reach the level which it wants to reach. And as we said again, it's because of the minor trend and not the major trend. Let's move on. Sherry, can you have a look at UK 100, please? Thank you. Yes, we will have a look. Do I have it here? I don't think so. I have it here. I will add it. USD against the Canadian dollar on the daily chart. We have this bullish candle. Again, the price didn't make lower lows at this point. Buyers, they stepped in very aggressively. However, we are not in a trending market anymore because we have equal lows. We have equal lows here. We do have this high close, this higher high. Up. So this high, it closed higher than this high here. So we have a higher high, but we do not have a higher low. So we cannot say for sure that this uptrend is intact. However, we can say from the technical perspective that bullishness is in play because we don't have lower lows. So that's the information we have from this chart. Now, if you enter here like I did, you make sure your position size is way less than your full position size because it's not a very high probability trade, but it has good chances to give a good reward to risk. USD JPY. This is a very interesting, and all the JPY pairs this week noted down. They are interesting and they can offer good tradable opportunities. So this is the weekly chart. I do my analysis here. I see impulse move, really, really strong. And I see shallow retracement, this one here. And then immediately the buyers, they stepped in, they bought aggressively, and they created another impulse move. However, we have 2 points here to keep in mind. The first one, this impulse move is way longer in duration than this impulse move. So all this buying pressure, instead of increased here, it didn't increase. Still, it's buying pressure. Now, what can we observe from this chart? When the bears, they stepped in for this retracement, it took them 3 weeks, 1, 2, 3 weeks, because we are on the weekly chart. It means each candle represents 1 week. So it took them 3 weeks to retrace before the buyers, they stepped in and they start beat the market aggressively. Now we see the first bear candle on the weekly chart. It closed almost lower than this candle here, which means that bears are in control for this moment in time. However, the major trend is up. But because we are on the weekly chart, we can see on the daily and on the 4-hour chart some deep retracements, because a shallow retracement on the weekly chart, on the daily chart, it's a deep retracement, because each weekly chart consists of 5 trading days. So 3 weeks, 3 times 5, 15 candles on the daily chart. Of course, it's going to be more, it's going to be deeper retracement. So what can we see from the daily? So our direction on the weekly, we say that it's up, but we have bearish pressure to the downside. If we go to the daily chart, we can see that bears are in control here. We had this, we drew it at the beginning as resistance. It broke through and it came support. On the 4-hour chart, we had a good entry here at this point 2 weeks ago. Then the market retraced all the way back. If you draw a trend line to see what's going on in the market, we see the trend line here. It's been broken now, so it's not relevant anymore. Now I will, if I'm a 4-hour trader, 1-hour trader, I will put another support zone here. The nearest support zone depends in which time frame you are using. So the first support is this one here. If you are a 4-hour trader, you want to see the price give you a strong price action somewhere here or even somewhere there, and you can enter short and you can take profits around here, which is a very, very good reward to risk. If you are a 1-hour trader, you can do the same methodology. You can wait for price to give you a kind of double top somewhere here maybe and enter short. You have a little bit wide stop and you can make a decent reward to risk. So that's how you can play with that. And if we go to, let's say, euro yen, pound yen, where are they? Anyway, I have Swiss yen here. On the Swiss yen, on the weekly chart, we have this double top. You see, the market was unable to push higher. It just pushed lower. On the daily chart, of course, it creates a bit of retracement. Then if you go down to the 4-hour chart, you see your first lower. You see, you had this higher high. The market made here a lower low. It made also a lower high here. So we have this pattern. Now the market made a lower low. Any pullback around to this area here, it's a good tradable opportunity to take it to the short side. Keep an eye, guys, this week on the Japanese yen pairs, and most likely they're going to give good trading opportunities. Okay. Let's have a look at the DAX 40 weekly chart, still in a downtrend. We had a good, nice rejection around this area here. Whoop. Do you see, guys, we had that last swing low on the weekly chart, and after it broken, we're going to use it as resistance. Market got rejected here on the daily chart. After this double bottom, remember we said that the market can push to the upside. However, because we have this pin bar here, rejection, and after that the market push lower, it means it's much of activity going on around these levels. And after this strong bullish engulfing candle here, it's the 4th trading day now, and the market hasn't broken above yet. Maybe it's going to broke, but the long-term trend is down. So I'm not looking to buy the DAX at the moment. Of course, on the 4-hour chart, we talked about this opportunity only here. That was an only valid opportunity. We could target these levels here, and that was it. Now we are just waiting for the market to show us a direction. Gold is trying to make its way up. We can see some bullishness this week in this market because we have the extensive downtrend. Sometimes these downtrends are very predictable. We have this strong, obvious area of support. Now this bullish candle here on the daily chart. We have this bullish engulfing. The market is trying to push higher, and we said that if we want to enter, let's say on the 4-hour chart, after we broke this area, which we marked it last time and we finally broke it, we can start here. It's a bullish engulfing candle. Okay, so if we enter here, we have, let's say, our stop. It has to be somewhere here, and we hope that this candle can go all the way here to give a good reward ratio. Bitcoin still on a bearish trend. Okay, on the weekly chart. On the daily chart, we had this higher high, but is the retracement. So far, we don't have any strong uptrend to say that we are in an uptrend. Market made a higher high here on this retracement, but I'm not looking right now to buy it. Let's see on the 4-hour chart. On the 4-hour chart, we made the lower low. If on the 4-hour chart, we didn't make this lower low here because we close below this low, it means that here we have downtrend. Do you see, guys? On the 4-hour chart, we have downtrend. On the daily chart, it looks like we have an uptrend. So there is no confirmation of the lower time frame to signal a buying opportunity right now. So we have to wait until our time frames, they get synchronized, as I told you so many times so far. Let's see the UK 100 up somewhere. UK 100, why it doesn't add it? Sherry, can you please tell me what exactly is the name of the UK 100? Sorry, guys, because I never look at this index. If someone can type view symbols, maybe. Okay. Okay, here we found it. Okay, so for those who are trading the FTSE or the UK 100 on the daily, on the weekly chart, let's draw our support and resistance zones close to the price. We see these low points here, so that's our support. We see these high points here. It's our near-term resistance, and a long-term resistance, it's this one here. So they are, all these levels are close to our current price, so we can just leave them on the chart. Then we go to the daily chart. On the weekly chart, we don't see any pattern. We just see this market just going on sideways. It's a fair battle between buyers and sellers here. So I don't have anything to write down on the weekly chart in terms of price action or pattern. On the daily chart, we see this range more clear. So we have this, the rejections, we have these low points here. The market is just chopping around between this narrow resistance and support line. So nothing clear at this market now. Maybe on the 4-hour chart we have something. On the 4-hour chart, it looks at that point in time, all the indexes, they had this bullish engulfing as the DAX, and we had this higher high, but the DAX was more clear in terms of content. So we prefer something which is more clear. So then this move, it's over around here. We had this bearish engulfing. So the market is trying to push lower. If we do our analysis, let's say a short-term analysis based on this bearish engulfing candle, it's been 1, 2, 3. That's the 4th candle, and the market it's unable to create any higher highs. So maybe we can say that bears are still intact, and it looks like it's offering for short at the short term, and very, very careful trade size. Okay, because the big picture is showing a trendless environment, and many times by looking the daily and the weekly chart the way I'm showing you to do it, you can save yourself from many false signals, especially on the 4-hour chart, because the 4-hour chart shows sometimes very nice trends, but for someone who identified this as a trend, it means higher high and higher lows. So he said, okay, I have my first higher high, I have higher low, it's a valid trend. I will wait for price to come around this area, this zone, and I will try to buy it. And then the market came down, they saw this bullish engulfing bar, you entered here, you have your stop there, and you see that the market, it stopped moving. And you are wondering why is that happening? It's a trend, it's an uptrend, it's a bullish engulfing. Why I cannot get it right? But if you do your analysis on the daily chart, even on the daily chart alone, you can see here that the market, it's in a trendless environment, because it's been since 21st of June, 20th of June, the price is just chopping sideways. It doesn't create any trends. So it's better to avoid this market. There are so many different markets. They can give us a nice trends to trade. So guys, these were the most important updates for today, this market analysis. I don't see any questions coming in so far. So I will wrap up. Thank you so much for your participation. Just be careful with your trading, as on Wednesday we have the Fed announcing most likely higher interest rates again. So I wish you happy trading, and I will see you all on Monday morning. Thank you so much.